Are you feeling nervous about the stock market these days? If so, you're not alone. The popular market sentiment gauge, the so-called greed fear index, has jumped over to the extreme fear territory. But fortunate for us, we've been here plenty of times before. And in today's video, I'll show you not only how to survive during these tumultuous times, but how to thrive. And to kick off that discussion, I'd like to introduce you to your new business partner, Mr. Market. Now, I didn't come up with the idea of Mr. Market. That credit goes to Warren Buffett's mentor, Professor Benjamin Graham. And he invented the idea of Mr. Market in Chapter 8 of The Intelligent Investor. And to highlight how important the idea of Mr. Market is, here's what Buffett said about Chapter 8 and Chapter 20 on The Intelligent Investor.
Ben Graham writes about it in Chapter 8 of The Intelligent Investor. Well, Chapters 8 and Chapters 20 are really all you need to do to get rich in this world. And Chapter 8 says that in the market, you're going to have a partner named Mr. Market.
Just understanding who Mr. Market is will get you halfway to getting really rich. So who is this guy? Who is Mr. Market? And why is he our business partner? Well, I got good news and I got bad news. The good news is that Mr. Market is a door-to-door salesman. He'll come to your house every day and offer to buy or sell your stock at any point. The bad news is Mr. Market is a moody and psychotic drunk. When he comes and visits your house, sometimes he's overly excited and enthusiastic. He wants to buy your stock at very expensive prices. And sometimes he comes to your door manically depressed and will sell you stocks at a bargain price. But the thing is that normally, despite his crazy mood swings, Mr. Market is no dummy. He's actually pretty smart. He's really good at pricing stocks pretty close to what they're actually worth. To zoom out, this is the idea of the efficient market hypothesis, which you may or may not have heard about. The efficient market hypothesis states that stock prices reflect all available information, meaning that it's impossible to beat the market because the market has already priced in all of the available information. But anyone who spends any time in the market, including Warren Buffett, would tell you that the market is not totally efficient, but rather it's mostly efficient. And we're grateful that a majority of people think the market is totally efficient. It allows us to make a lot of money off of them. So how does Benjamin Graham think that we should deal with Mr. Market? This is actually where most people make mistakes and why people lose money in the market. See, Mr. Market is there to serve us and not to guide us. If you follow Mr. Market blindly, you're going to get stuck following his crazy mood swings. When he's really, really excited and he's pushing you to buy stock, well, you're going to be paying more than what it's worth, and that's not good in the long run. But then when he comes to us and he's manically depressed and he's offering things at fire sale prices, yeah, he's sad and depressed, but that's actually the time that we should be striking. So how do we make Mr. Market serve us? It all comes down to a very, very simple idea. But weirdly enough, and I can't understand this, very few people actually follow it. And that idea is that you have to know the value of what you own. The best way to think about this is let's take away the idea of the stock market. Let's instead pretend that we own a farm and Mr. Market is our neighbor and he owns an identical farm to what we own. And as far as you know, I'm just some random YouTuber, so why listen to my theory on this? Here's Buffett.
When you bought the farm, you looked to what the farm would produce. That was what went through your mind. You were saying to yourself, I'm paying X dollars per acre. I think I'll get so many bushels of corn or soybeans on average. Some years good, some years bad. Some years the price will be good, some years the price will be bad, etc. But you think about the potential of the farm. And now you get this idiot that buys a farm next to you, and on top of that, he's sort of a manic depressive and drinks, maybe smokes a little pot. So his numbers just go all over the place. Now, the only thing you have to do is to remember that this guy next door is there to serve you and not to instruct you. You bought the farm because you thought the farm was had the potential. You don't really need a quote on it. And that's what you're doing when you buy stocks. But you get this added advantage that you do have this neighbor who you're not obliged to listen to at all, who is going to give you a price every day, and he's going to have his ups and downs, and maybe he'll name a selling price that he'll buy at, in which case you sell if you want to, or maybe he'll name a very low price and you'll buy his farm from him. But you don't have to, and you don't want to put yourself in a position to where you have to.
That's exactly right. If you're going to buy stocks, then you have to know what you own and why you own it, and what you think the value of it actually is. To do this, and this is a critical step in Buffett-style investing, you have to understand your circle of competence. Instead of going out and buying some crazy quantum stock that you have no idea what it's worth, you just hear a lot of hype about it, go buy a business that you understand, either through your own taste as a consumer or through your professional experiences. One of my best investments of all time was investing in Amazon pretty heavily throughout the mid to late 2010s. And I bought it because I read a book called The Everything Store. And it gave me an insight into what Jeff Bezos was thinking and where he wanted to take the company. And I'm a little bit of a computer nerd, so I understood how powerful AWS would be. And I had an idea of what the intrinsic value of Amazon was. And it looks like a dip now, but in 2018, the stock went down almost 17%. And I couldn't really find a good reason why, other than a lot of fear in the market. And so I invested super heavily into the stock, and that paid off really well. I still own that stock to this day. And that was the idea. I had my farm, call it the Amazon farm, and Mr. Market came to my door drunk and manic, and he said, I wanted to sell it to you for 20% off. I said, great, I'd love to own more Amazon, especially at this discounted price. And so I doubled down. But if I didn't understand Amazon as a business and what I thought it would be worth in 10 to 20 years, I would have just gotten scared and sold out of the position. So what should you do right now? Well, the answer is really simple. And instead of telling you what you should do, I'll tell you what I'm doing. First off, I always dollar cost average in the S&P 500. While I'm looking for the needle in the haystack, I'm going to continue to buy the haystack. And I have about $400,000 in T-bills that I'm ready to deploy. I'm hunting very hard right now. This is the most exciting time I've had in about 2 years in the market. But let's not kid ourselves. Valuations are still very, very high right now. We had 2 very strong years of overall market performance. It became a little irrationally exuberant. So we could have a lot of room to fall. The truth of the matter is no one knows what the stock market's going to do next. No one. The best thing we can think about is it's a store, and you can go buy companies and you can own a piece of those businesses. And right now the store is going on sale. If it becomes a fire sale, it's going to be even easier to find good opportunities. And if the market does continue to crash, you should get excited. That is going to be how you make money in the long run. And if you're finding that you're having a hard time riding out this market turbulence, then consider just going into a passive strategy approach where you just buy the S&P 500 throughout your entire lifetime, where you just dollar cost average so you don't have to worry about these swings. But if you are able to frame your reference into buying a whole business and knowing what the value of that business is, then you really should consider active investing. It has changed my life. It's my favorite hobby. It's an incredibly fun thing to do, and it's intriguing and stimulating, and it makes the news actionable. It's a really cool hobby. I like to think about studying businesses like you're going to the gym. You can listen to fitness influencers all day, but you really won't get stronger until you go and start picking up weights. That's what you should be doing if you want to do active investing. Start studying businesses in a Buffett-style approach and try to determine what you think the intrinsic value of them is. And if you're completely new and don't really have a process for that, I got really good news. We're creating the gym of investing right now, a place that gives you a framework on how to pick stocks exactly like Warren Buffett does. We follow exactly what his methodology is. And if you're completely new, I distilled almost 60 years of Buffett and Munger style investing into about a 2-hour course that's included for free as part of your Flank membership. So if you want to check that out, there'll be a link in the description below, as well as a link to our free Discord. I really hope to see you out there. That's all for this one. Thanks so much for watching, and we'll see you in the next one.